There we go. Let's unmute myself. That would help. I'm getting so excited about seeing some red in the market that I forgot to unmute myself. Anyway, I was just waffling on. I wasn't sharing anything of any importance. Gentlemen, thank you for mentioning that in the chat. So, yeah, what was I saying? Dow down a little bit. You were a brave man, a woman to be shorting that yesterday at the highs, all-time highs. You got away with it today. I wouldn't say that's a trade I want to repeat all the time. Bit of downside action on the DAX today. Bitcoin down. It was due a little bit of an unwinding, right? It was due that we had Trump trade, big rally after the election, market rip into the high side. Lots of things going on, super stretched. I like to see a bit of two-way trade. Dow down 350 or so at the moment as we speak. Russell down a couple of percent. Bit of an unwinding. Let's see where it goes. Bitcoin down a smidge. It was due, wasn't it? It was due some kind of contraction. Let's see if it finds a base over the next few days. Got a bit of data coming out to the latter part of the week. So yeah, we'll see. It's good to have some spice in the markets. Hope you guys got on all right during elections. Last webinar, we're covering some ideas and some thoughts on that. It was pretty much a one-way street. Came out, Trump looked like he was an early winner, and he held that lead. He held that win all the way through, and market just rallied and rallied and rallied. So let's see the market's response to that. Okay, so let's get started. First of all, well, let me just tell you share with you this. This is a book called Trading to Win by Ari Kiev. It is The Psychology of Mastering the Markets. This is a pretty beaten up old copy. I've lost the cover somewhere on the line. There's a foreword here. I think it was Steve Cohen, so maybe not the best person to be talking about his stuff with his track record of what he got up to, but nevertheless. Okay, he says here, I've worked with many traders in my life. Most combine some form of chart reading, tape analysis, and or fundamental analysis to make their decisions. The super traders, though, share certain common traits that supersede whatever discipline they might pursue. They are totally committed to their own particular style and demonstrate complete conviction when trading. Because of this conviction, they are able to take large financial risks and have the confidence and belief that probability is on their side. They also have the ability to admit their mistakes and minimize the consequences. That is, losses when they are wrong. They are independent and they think for themselves. They're not easily influenced by others. Most traders, surprisingly, are not like that. They are indecisive, lack conviction, and are afraid to take risks and are making mistakes. They are unaware of the personal demons that are holding them back from true success. Pretty interesting foreword there in this Ari Kiev book, Trading to Win. So interesting because we're going to cover some of that stuff today. First of all, while we're on the subject of taking risk, let me just remind you, please, trading with leverage is obviously super risky, and don't do what Steve says there and just go crazy with your risk. Don't risk more capital than you have available to risk. You allocate risk capital. You decide, am I comfortable with losing that because I've got a high probability of doing so? And then you can trade in a more relaxed manner. And it's not just from a kind of accepting the risk perspective, but it's also from being able to trade from a relaxed, low stress perspective. That's going to be a theme that runs through the webinar for this evening. But just reminder, I know most of you know this already, but if you're brand new to trading, do make sure you understand what you are doing, how CFDs, how spread bets work, play around with demos, see what sizing does, see what your stop losses do, learn about slippage, learn about gap risk, all that type of stuff before you risk your own money. And only then, when you're comfortable, just be very, very mindful of how this business works. Okay, so trade smarter, not harder. So this is going to be an interesting one for you. I think you're going to like this. Honestly, I really think you do. So first, let's get on to it because I've got lots of slides to cover. Enough looking at the markets, enough talking about books, enough talking about risk. Let's get going. Jesse Livermore quote here. It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. So very apt for today because we want to talk a little bit about how to really get the most from trading if you are not able to sit in front of the screen. You're not full-time trader. You have other obligations. You have family. You have a job. You have a business, whatever it is, and you're trying to make that work somehow. So this is going to help you today. First of all, let me just mention this. Listen, I've got a couple of decades of experience in the markets, but I definitely don't have all the answers. I don't pretend to. I will help you as much as I can. I will guide you to other people who I think have a better insight to stuff. If you ask me a question I don't know the answer to, I'll share with you some ideas I think are valuable from my own experience as a trader and also from my observation of other traders coming up the ranks, running Traders Mastermind. I see traders who were struggling and finally got things working. I see traders who struggled and haven't quite got there yet. So I can see this and I observe, and I'll share these stuff with you. I have the pleasure of knowing some really, really great traders as well. So I see what they do and how they operate. So I think I'm pretty well placed to help you, but you must do your own research, your own analysis on stuff, your own homework. We're not here to share something that you can go, oh, that's the holy grail, the silver bullet, and go and make it happen. You're gonna have to put some work in for yourself, and I can guide you and help you and kind of pinpoint some of the things I think are going to be valuable to you. But really, it's you got to run with it yourself, and that's when you get the most momentum from it as well. Okay, so let me start by kind of reminding you perhaps your frustration. How gentlemanly of me. The frustration of part-time trading. Listen, I get it, right? I see this from other traders as well. I see traders who are, they have a job, they're busy, right? They've got a family life, whatever it might be. And it feels like I hear this time and time and time again from traders who, are trying to kind of make trading work and bring it up in parallel, and they hope to kind of make some revenue from that, and they hope to kind of supplement. And it's tough, right? Because they feel that they don't have enough time to dedicate to trading. They always say this: I feel like I'm missing opportunities. If I was in front of the screen, I would have caught that. I would have made some money. I wouldn't have had the loss. I would have capitalized on that volatility, etc., etc., etc. And I see this a lot, but I also see lots of traders who make it work with a very, very busy job. I think of one in particular in my mind now has come to mind, works very, very hard, got a very high paying, powerful job, if you want to put it that way, and manages to fit trading around it. But we've got to kind of be frank with yourself here, is to say, listen, it's not going to change. You have times when you can come and get involved in the markets, and you have other obligations that aren't going anywhere, right? So I always like to think of it, you're an entrepreneur, right? You're trying to solve the problem. So let's solve this problem together with the constraints that you are given, right? Any good entrepreneur, any good high quality businessman, CEO, etc. You think of all the greats out there, they have solved problems with the constraints they're given, whether that's capital, whether that's time, resources, whatever it might be. And trading is no different, right? Our job is to solve the problem with the time constraints we're given, the capital constraints we're given, rather than sitting there wishing we had more resources. I wish I had more time. I wish I could do that. Let's solve it, because it is solvable. You just have to think about the problems you have, or the challenges you have, and the constraints you have within your own trading. Okay, so let's fix it. So our goal today is to build a sustainable trading methodology that fits around your lifestyle. We want it low stress and doesn't cause you frustration or anxiety, is scalable from a position size perspective rather than adding more time into it to scale it, is as efficient as possible, and maximizes the resources you currently have. And why do I say this? Now, you come here saying, well, looking for efficiency hacks, trading smarter. As I was putting this together, I thought to myself, do you know what? There is no point in here me sharing ideas and ways. I'm going to get to those in a moment. I've got so many good sort of ways to be more efficient in your trading, setting good alerts, kind of using AI, using tools, and I'll share all those towards the end of the webinar, right? But we're going to cover all this. But before we do that, we need to fix the problem. Because if your trading isn't what you want it to be, there is no point in being more efficient at being bad. We want to fix that before we kind of get going, and then we find some efficiency hacks. Then we try to make it sustainable. Because if you think about where you are now, and listen, if you're doing very well in your trading, it's working for you, good. Double down on what's working. That's exactly the right thing to do. Keep on the path you're on. If you're finding traction, that's great. Keep going. If you're not, then you kind of have to this internal reflection, right? And say, hey, listen, I'm busy, I've got other stuff going on, I've been at this for a while, and I don't seem to have got the results I want. What do I do? How do I fix this? And that's what we're going to talk about today. And then we're going to get into some efficiency hacks, if you like, get into kind of using some tools and things to really take the stress off your shoulders. Because I remember talking to one trader, busy guy, got a lot going on. You know, he's got a young family. He's got a very very busy job. I think his partner's got a job as well, and he's trying to get trading to work. And I remember saying, listen, what you're doing is just this is never going to work for the situation you're in. Let's reframe things. And we've reframed things, and he suddenly had a light bulb moment went off. He said, listen, I feel like this is more relaxing. Like I'm not where I want to be yet, but I feel more relaxed with it. I can feel like I can handle all this. I don't feel stressed about them coming and seeing the market ripping off without me because I've now got a methodology and a process that fits around my lifestyle. I'm enjoying it. It's becoming much more pleasurable. And if you can get to that point, then it becomes easier to make forward momentum as you get forward momentum because you're enjoying it. You're not like stressed out and frustrated, which can become the one thing that knocks you out of the game. It's kind of two resources that knock you out of the trading game. One is you run out of money, and two is you run out of financial, mental capital. So financial capital and mental capital. You just think, I've had enough of this. I've had enough of getting beaten up. You're not enjoying it anymore, and you kind of forget it. So you want to preserve those as much as possible. So we're going to really cover this a lot today, and try and do as best I can to get through this. And if you've got any questions, then please stick them in the Q&A. I'll get to them at the end. If I can't answer them myself, I will absolutely direct you to somebody who can, or a website or something that will help you out. So let's try and build that sustainable trading methodology. It fits around your lifestyle. It's efficient, it's low stress, etc. Now, I'm not promising, oh, you're going to go out there and it's going to be the most magic thing ever and it's a silver bullet and you're going to become the next Paul Tudor Jones by the end of the year. But if you can just get some grip and just feel a bit better about your trading, then we can move forward. Okay, so most time-strapped traders do this. I've observed this through probably dozens, if not hundreds of traders over my time in the markets and over my time working with other traders as well. They normally just grab some screen time when they can, run into the market, go, oh, I've got a couple of hours before work, or I've got a couple of hours before my tea or my dinner, or before I go to bed, or wherever it is. And they come in, grab some screen time, look at their favorite markets. Maybe it's the Dow, maybe it's some of the major FX pairs, maybe it's gold, maybe it's all the big boys that we know that are the popular ones: crude oil, gold, Euro USD, USD JPY, cable, Dow, DAX, those kind of stuff. Look for a half decent trade setup. Look at Trading 101 textbook. Oh, it's a head and shoulders. Oh, it's a pullback. Oh, it's this. That's good enough. What time frame I'm looking at? Well, I'll go down on time frame until I find something, trade it, think it's the right setup, and it's just that fritter away of capital time and time and time again, right? That's what most traders do who are time strapped. Or they kind of come in, trade the popular markets on a higher time frame, look at levels, maybe using this mix of indicators to make decisions. And listen, let's be honest, and I'm here to kind of be honest with you, that's just not going to cut it these days. We're training against some of the best minds in the world. We have to find edge. As retail traders, we have to find edge. Where is your edge with that? If that's you, maybe step back and go, hey, I don't think I have edge there. We'll find you edge, don't worry. But sometimes there's a paradox called Stockdale paradox, right? I've mentioned this before, and I think it's so great. I think his name was James Stockdale. I should remember his first name. I feel a little bit disrespectful not knowing that. I would tell you the story. Anyway, POW in Vietnam, he was captured. And one of the things he said was, hey, I had two things to think about. One was I had to be completely honest about where I am now, which was horrendous. I am in very, very bad conditions. I'm not being fed. I'm being treated very, very, very unpleasantly. I can't pretend that I'm not. However, the second part of my thinking is I believe it's going to get better. I believe I'm going to escape. I'm going to be rescued. I'm going to get out of this someday, and I'm going to enjoy time as a free man, walking on the golden sand, sun in my face, hand in hand with a loved one, whatever it might be, right? And this was a Stockdale paradox. Now, I know it's very different from trading. I'm not pretending it's anywhere near the same. However, as a trader, sometimes we have to be brutally honest about where we are now and look at the numbers, look at the equity curve and go, that is not good. I'm not happy with that. That needs to change, right? That's the first part. However, I'm optimistic about where it's heading in the future. And that dichotomy, if you like, of observation of your results and your performance can help you not just sweep stuff under the rug and say, I'm a great trader, and your equity curve is just tanking to the downside, which is pointless. It's observation, reflection, and saying, yes, it's not working. However, I'm optimistic. I'm super bullish about where I'm headed. Okay, so it's not working. Why is it not working? Let's be honest here. You're probably in markets with little or no edge. You're probably trading when markets are chopping about. You're grabbing a few hours here and there, expecting to be able to, take some money from the markets. And that's just it never. Even the most experienced, best traders in the world, if you just plonk them in front of the screen and say trade, they will go, no, there's no edge here. My setup is not here. The chance of my setup showing, if it does, I'll take it. But I have edge, which is based on supply demand imbalance. It's based on exhaustion flush. It's based on momentum, whatever it might be. And I don't see it now. So I'm not just going to guess based on some sort of short term support level or, a breakout of a 1 minute candle. I'm just not going to do it. Right. And that's one reason why it's not working. The second is that you're trying to exploit an edge that needs more screen time. What I mean by that is there are traders, of course, who are sitting there in front of the screens all day long, getting in tune with the market they're trading, right? They understand the ebbs and the flows and the ups and the downs. They see the supply demand imbalance shift. They see bids coming in, rest, relax, pull back, contract, compress, go again. And they kind of get in tune with it, but they need that screen time to see the differences, the volume shifts, the range shifts, the volatility shifts, the kind of shifts in regime and sentiment. They have to feel that. And if you're just coming in and grabbing a few hours, you're missing bigger piece of the puzzle. You're missing how it opened. You're missing what happened yesterday. You're missing all that stuff. And so what I mean by this is, if you're sitting there and you're observing in the type of trader you like to be, and you're watching that price action tick by tick, you kind of have to be there, have to put in more screen time to exploit that as an edge rather than just coming in and expecting to kind of see the differences and see the little nuances with a couple of hours grabbed here and there. Anyway, let's look at how we could potentially change it, and we'll look at making this into an efficient process for you. So first of all, a reframe. So traders with nothing else to do but stare at the screen can easily fall into traps, right? So we need to reframe this. It's not the whole panacea and golden panacea of, hey, if I got all this time in the world, it's going to be great. Many traders who have the time to sit in front of the screen, they overtrade, they overthink, they do too much analysis, they're not holding on to trades. They're doing exactly the opposite of what Jesse Livermore said in the first slide, which is just not working for them. They're just getting frustrated. They're overthinking, overdoing stuff. And so being forced to optimize your trading time is actually a positive. It's a positive thing. So reframe it as that. Let's think about, hey, actually, because I've got limited time, it means I can spend quality time in the markets. And I'm forced to think like an entrepreneur. So what's your goal, first of all? What are you trying to do with trading? Are you trying to stop losing money and just start to break even, lose less money? Are you where are you headed to? Are you trying to, double your account? Is it a small account? Are you trying to make a certain amount? Or have you got a financial goal? Are you trying to get more disciplined? What's your goal, right? What resources do you have as well? Your risk capital allowance, your time, you've got to be specific here. So you have between 6 o'clock and 9 o'clock every evening, or you have 1 day a week, or you have 1 hour. You get the idea. I'm going to go through all the different permutations of the time you may have. What tools do you have available to you? What people do you have available to you? And now solve. Right now, we're solving for this, because if you don't solve, we're just going to have the same results time and time and time and time again. And sometimes all the time, that never gets us where we want to be. Okay, so one option you have here, if you have the flexible working family schedule, and you can kind of say, right, I'm working, but if I see something, I can go to the screens when I want. I just can't sit in front of the screens all day long. Then maybe you can wait for specific volatility conditions and then go, right, we've got a really volatile market. Things are kicking off. I'm going to go and I'm going to focus on that market. I'm going to trade that market. For example, NASDAQ's really starting to go, looks great on a daily chart. You want to get involved in intraday, you can allocate a day or a morning to trade that. And that's okay. I think that's a good option, right? But you have to have this flexibility, being able to put everything to one side and saying, hey, I'm going to focus on the market when the market is in play, when the market is doing something interesting, there's supply demand imbalance, I believe there's edge, then I'm going to trade, then I'm going to get involved in it. However, for most people, that's tricky. I get it, right? Most people have, times allocated to work, to family, etc. So if you can't do that, intraday trading is going to be tough. And I'm a little picture there of some guy getting belted, and that could be you if you're not careful by Mr. Market. We all know Mr. Market has a decent left hook on him, so be very careful about that. We don't want to be coming in and saying, right, I see the market. I'm going to try to do something. I'm going to try and squeeze kind of something out of this market. It's not doing anything, but I'm going to try and trade it. That's a real recipe for disaster. It's frustrating. We have all been there at one point or another, and it's not a nice place to be. We want to be trading when there's edge, when there's opportunity, when there's stuff going on, because that's how we can exploit some of these inefficiencies that happen on a short-term basis as short-term traders. Okay, so that's one option. This is a better option, I think. And again, it's my opinion on stuff. I'm going to run through a process of how I think is a good way to approach the market as a busy trader, as someone who's got other stuff going on. And then we'll look at how we make that super efficient, how we kind of use the alerts, how we use AI, how we use tools to really put together a new plan, a new approach that is kind of quite different. And you can kind of look at this and go, well, it's not for me. That's fine. Or you can look at it and say, you know what, it is time for a change. I've got nothing to lose here. Let me have a look at this. Okay, so first things first, we need to identify the markets we're going to trade based on edge, right? We just need to look at the markets that we want to trade that are actually doing something. Otherwise, we're not going to be able to take advantage of the opportunities, right? We're not going to be able to extract profits that we want to, right? So we identify the markets we will trade, we identify the strategies we deploy. And again, I'm not going to go into massive depth on that because you need to work out your strategy for yourself. We've done webinars and stuff before where I've kind of shared some ideas and momentum ignition strategies, mean reversion strategies that may help you if you need that, but you probably have them already. 3, we need a process that has front-loaded work. And what I mean by this is that we have to do all the work beforehand. If we do all the work beforehand, then we're busy. We can grab time to do a lot of the work. And then when we're executing, there's very little to do. And that's what we want. We want very little to do in the heat of the moment. We don't want to be thinking through stuff. We don't want to be doing things. We want to be able to say, right, as a trade on, I know exactly what I'm going to do. Can I get to the screen to do it now? Or can I get to the screen later? That's fine. We will take the pressure off, de-stress the whole situation. So building a process that has front-loaded work, that's really important. Then we want a quick and simple routine. Intraday, we want a very simple routine. We don't want to be going through reams and reams of stuff. You're busy. You haven't got time to be doing that, right? You want all the effort done before, very quick, double check, recalibrate to the conditions, to my risk, all that type of stuff. We'll go through that in a moment. And then we want to leverage the tools and alerts to assist us so that we aren't glued to the screen. We aren't sitting there. And by the way, I happen to think that even if you do have the time to be able to sit there, you don't want to be sitting there all day long. You just don't, because it just encourages over trading, encourages over exposure, encourages boredom trading. I think regardless of the time you've got, it makes sense to kind of be out and about and doing other things when there's no edge, and then having alerts, tools, and your strategy and your analysis helping you be focused and zoning in and being really on point, ready for when the opportunities do present themselves. So let's go. So find markets that are in play. And this might be a little bit controversial. It shouldn't be, but it kind of is, because a lot of the stuff we see out there on social media is, people are trading the same old thing time and time again. There's nothing wrong with being a market specialist. I don't think there's anything wrong with that. However, as I said before, I think that I'm just going to... That's better. Okay, so I think a lot of people, and get back into it, I think a lot of people just get into the same thing and they're trading the same things that aren't really in play. And you need something that's moving, right? You need a market that is moving. And I know this is, again, maybe not the most popular opinion because you may have a basket of stuff that you like to trade, but we don't want the results that everyone else is getting. We want the results, different results. We want to be in that upper chunk of traders who are making this work. So you need a market that's moving, right? You need a market that's in play, has a supply-demand imbalance. And you probably know, right? I think that you probably know this, that when you are trading at your best, you're trading when things are moving. Volatility is shifting, right? You probably have a favorite market you like to trade. And I would almost guarantee, you can never guarantee anything in the markets, but I'm almost certain that the best times you have had are when that market is moving. It might be moving like a decent rotations intraday. It might be trending. It might be doing this. I can imagine that's probably your best. And your worst is probably when it's sitting there doing nothing because you're trying to extract and trying to read conditions when in reality it's just noise. And so we need a market that is in play, has a supply demand imbalance that we can read, we can get hold of, and we just don't want to be guessing direction. So many traders are guessing direction in a market that's doing nothing. And I'm sorry, it's just not going to cut it. It's not going to cut it. I've never seen anybody who can sit there, and just constantly chung, 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 make good trades, make good trades, make good trades. It doesn't exist because there's no edge. The market is a lot of time is presenting noise. And your job as a trader is to be smarter than this and to say, hey, I only want to risk capital. I only want to get involved when I think the odds are on my side. Do we know it's going to work? No, we don't. That's where our stop loss comes in. That's when the risk reward ratio of the deal comes in. And we're trying to structure it so that we get an asymmetrical risk on this. So we go, hey, I'm risking 1 to make 4. And I'm hoping that I'm right 52% of the time or whatever it might be. That's the game we're playing. But when we're getting involved in noise, we've got a 50-50 shot at best. You've got to pay a bit of spread, and it just erodes your mental capital. You might sit there and kind of break even, but it's going to erode your mental capital. Okay, so be very, very mindful of that. So guessing direction in directionless market is not going to cut it. We want to now build our universe. And this, I appreciate for many of you watching this, you might be like, you know what, I've always been a trader. I always trade euro. I'm a euro trader. I'm this trader. I'm that trader. That's okay. But I think if you don't have the time to dedicate and sit there and watch all the nuances, then that's very, very difficult to get right. It's very difficult to get right. So something to consider if you are time strapped and struggling for time is to just say, yes, I'm a trader. I don't need to plant my flag in the ground and say, I'm a short-term Euro USD trader. I'm a short-term currency trader, whatever it is. That's okay if that's your preference. But why not become a trader who just goes where the biggest opportunity is? Why not just go and say, hey, do you know what? I like trading anything that has opportunity, whether that is the major pairs, whether that is the indices, whether that is commodities, whether that is stocks. We're in a beautiful situation now where brokers like Pepperstone offer an absolute huge selection of stuff. They're offering 600 plus US stocks. They're offering 100 plus UK stocks. They've got all the indices. You can trade China now. You can trade Forex. There's so much stuff. There's no need to be focused on one thing. Now, again, I don't want to kind of say, well, you should trade everything, but this is for people who are struggling to get traction by focusing on one thing when you don't have the time. That's the difference. I think I get that. I think you get that. Right. So what we're trying to do here is screen for the markets with the most opportunity. And what will probably happen for you is this. You will probably trade one thing quite frequently for a period of time. Maybe that's a couple of weeks, maybe that's a couple of months, whatever it might be. And then you'll maybe shift to something else that's in play. And maybe you'll shift back to your favorite market that suddenly becomes in play. But the idea is that we want to go the market that has the most opportunity when we have the time to. And because it's got the most opportunity, it's going to be the most forgiving for us. It's a one-way street. It's got some action, it's got some volatility, rather than kind of, jumping on a technical pattern and going, oh, that's a, flying panda wedge pennant thing, whatever it is. What is there, a flying panda thing? I don't know. But you get the idea, right? The textbook stuff that says this is going to work and that's going to work. And in reality, the context is way, way, way more important than any of the patterns. There's nothing wrong with the patterns. Don't get me wrong, I love a bull flag as much as the next man, but the context has got to be there, right? The context has got to be there. I'll be fading any bull flag that happens in the middle of a range. This to me, that's just momentum ignition failure, as opposed to a broken out of a range as a catalyst, a multi-day move, all that kind of stuff. That's by the by. So this is what we want to do. We want to build our universe of stocks. Okay, so next thing is to dial in our process. So how do we do this? How do we dial in our process? Let me just make sure. Okay, just double checking some stuff over here on my right-hand side. I'm making sure I see some things flash up now and then. I'm like, oh, make sure I haven't gone muted. I've nudged the mute button or something. Anyway, let's get back on track, ladies and gents. Dial in your process. So set up your screeners, load in the markets you want to scan, and allocate time once a week for eyeball screening. What I mean by this, you just put in the markets that your broker offers, right? So Pepperstone offer a big selection of indices, big selection of stocks. You don't want to trade all of them. You might not be interested in trading some French stock or some German. You might not be, you know what, I just want to trade the top tier US stocks, the top thick indices with a decent tight spread, currency pairs, commodities. I'm not interested in the stuff that's got a wide spread. I'm not interested in the stuff that's really, really doing nothing. That's fine. You can always prune it down anyway. But now you can, okay, right, I'm a trader. I'm a trader. My job is to capitalize on supply demand imbalance. And you're reframing that in your mind. You're like, okay, yes, I've got my little favorites. That's okay. But right, load them in. And once a week, and again, this is the beautiful thing about if you have a time constraint, you find once a week to eyeball screen. And what could I have come up with a better word than eyeball screening? I probably could, but it's there. I've done it now. It's on the slide. You got to live with it. I'm sorry. It's an eyeball screening process. So eyeball screening. The optometrists are probably cringing here. But eyeball screening to me means I've got the daily chart up and I'm scanning through it. I'm ripping through the charts. I'm looking, scanning through. Dum, 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 dum. I just want to see what's in play. Is it trending? And this is a process that you'll start to build up over time through intuition, through judgment, through experience. You just want to kind of run through all the charts. You want to load them up into TradingView or FinViz, whatever it might be. There are screeners that can help you go a little bit deeper. We'll go on that in a moment. But you kind of just want to get an idea. So what's moving? And stuff is not moving, will be not moving for months. But stuff that's in play, you just kind of put it through the initial filter and go, USD JPY is in play, and gold's in play, Nasdaq's in play, and that's not in play, it's not in play, not in play, not in play. Tesla, yeah, bring that in. Nvidia, yeah, bring that in. Meta, maybe not. You can go through and you now build up a smaller universe of stocks, indices, commodities, currency pairs you want to trade. Now, listen, if you want to get rid of stocks and say, I don't want to trade them, that's fine. I would question why, though, because many people say, I don't trade stocks. I'm like, well, is there any reason you got something against stocks? And normally it's something that's happened before. It didn't work for me. I traded Apple before and it didn't work. It's like, well, it's a chart. The spreads are super tight on most things. Granted, they're slightly wider on some of the stuff than you would get if you're trading the Dow or the DAX or those thicker instruments have a lot of flow. That's just how brokers have to work, right? But ultimately, you're trading flow. You're trading supply demand imbalance. You're trading momentum. You're jumping on momentum ignition. You're trading mean reversion. You're trading exhaustion. Now, there are some quirks and some subtleties you've got to be aware of when you're moving instrument, like the 24/5 nature of, say, the Dow compared to some stocks. And actually, Pepperstone do offer a lot of the stocks 24/5 now, but they're slightly different. But you get the idea. There's a gap risk there. There's earnings risk. So you've got to understand the little subtleties and nuances, but that's not hard to do, right? Just operational work you've got to put in. But regardless of that, like Peter always says, chart's a chart, right? Not that interested in what underlying. Now, I'm a little bit more nuanced in that. I think that there are some subtleties and stuff to be aware of, but ultimately, ask yourself why you're not trading stuff that's just been playing, moving. So, anyway, we do the screening. We allocate one once a week, and this is great if you haven't got loads of time because you can do it whenever you want. You can get your laptop out, get your iPad out, sitting in your sofa on a Sunday afternoon, whatever it is, and just looking through the chart, Sunday evening, whatever it might be. Okay, TradingView, FinViz, however you need to do it. And I think TradingView is a really good way of doing it. You can also use a screener. So TradingView has a built-in screener. Check it out, use it. It takes a little bit of time to get used to it. It's not as intuitive as actually the chart, I don't think, but you can. There's some filters there already. You can put in most volatile, and you can screen out some of the stuff that Pepperstone offers or doesn't offer. And you can easily go through then and go, right, I've got 1,000 things to look at here. I just want to see the stuff that's moved the most in the last week or moved the most in the last month. Or as a volatility filter. There's so many filters you can do with TradingView. You can filter it by indicator. You can do all sorts of stuff. And the objective here, I'm not going to get too far off track here and talk about filtering, but the objective here is we're trying to trade or at least be aware of the markets that have the most potential edge to extract. I feel like I'm a broken record. I do apologize if I do sound like that, but honestly, especially when we're on the focus, and our focus point is we don't have don't have enough time to trade. You can't be there all the time. You can't just be watching the DAX and trading the DAX as you'd like. You have to accept that and solve for the constraints you've got, which is, okay, I can't be there, but I can go to stuff that is in play and I can look at that and I can get in tune with that and I can maybe work that around what I've got going on. And that's the difference. That's why we're kind of looking at this type of stuff. So FinViz as well, great screener here. You have to meddle around with market cap, but you can screen by unusual volume if you want to add stocks in it. They've got a great Forex, kind of very, very easy to look at all the Forex pairs on there, some of the futures and stuff. So you can start to see some of the futures. Pepperstone, I think, offer almost all of those futures on that tab there. So, now you start to build a filtered watch list, right? So you get good at doing this. And this could be, hey, these are 4 currency pairs that are in play. There are 2 commodities that are in play, 2 indices and 6 stocks, whatever it might be, right? And just like last time when I made this watch list for elections, it's just the preparation. And if you notice, even though I don't have the time constraint, I still want to front load the work. So I did a lot of front loaded work for the election, knowing, okay, what's going to move? What do I think is going to happen? What's the Trump priced in trade? What's the Trump not priced in trade? What's the Harris priced not priced in trade? What's the contested? All those things that we talked about is front loaded work. And that just helps relieve all the pressure on the day where you go, I know what I'm going to do. I know how I'm going to behave. I know how I'm going to trade or not. It becomes more relaxing. And so the objective is to do that every day, every week. So you do all the front loaded work, you build your filtered watch list, you've got markets in there, you know what you're going to do. We'll talk about kind of setting the alerts and stuff in a moment, but you've done all the work. You can feel relaxed. You can go in saying, hey, I'm watching the stuff that's meaningful. I'm watching the stuff that's moving. And by the way, what you kind of want from this, and this is just practice, and it's something I think you can build with time. I'm not a huge fan of just screening based on a metric. It's okay, but I still think eyeball is great because sometimes things are just getting onto the screen now. Maybe they're just breaking out. They're interesting. You want to bring them into your watch list, but maybe they're not going crazy yet. So you want markets that got a high rate of change. What I mean by that is, I guess you could use ROC as an indicator here, but you want something that's moving quick, right? It's moving, shifting. Tesla's a great example at the moment. It's moving aggressively, very, very quickly. Obviously, it's been another catalyst because of the election results, but you get the idea. Persistency of trend is another one. I think this is a phrase coined by Linda Raschke, this constant chug, 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 chug. That's interesting. They don't want to slow chug. That's me personally. Maybe you do, but that's something you're like, okay, if that exhausts, is there a short opportunity? Is it pulling back? Can I buy that? You want to be ready, right? You don't want to be late. You want to be, okay, that's on my watch list. And just have a good looking chart. It's a chart that looks good. And that can be whatever that looks like to as well. If I put 10 charts in front of you, you know the one you're like, I'll trade that one, thank you. If I said to you, right, is 100 grand. You've got to allocate it to trading one of these instruments. I'm not telling you to position, but you can only trade one of them. Here's a 10 charts. You could pick one. You could pick one if they're all very different. You'd be like, I like trading that type of thing. It's swinging around. It's taking out highs and lows. It's exhausted. It's moving. It's got those flushes. Yeah, I'm having that. Or maybe you personally says, likes trends. I like to wait for that first pullback in a trend. That looks like it's just getting going. And wait for a pullback to a 20 EMA, whatever it might be, right? So you know what a good looking chart is to you. Now you've compressed your watch list down to a handful of stuff. And you're doing it when you can. And so you're able to then focus those valuable resources during the week when you're busy, you've got other stuff going on the right targets that have the best and highest opportunities. And that's the important takeaway here is, allocating what is valuable. It's your time, it's your focus, it's your energy. You don't know how much you've got. You don't know when you're going to have it. You've got other stuff going on. Trading is very much coming secondary, and that's just a fact. And so you're solving for that and saying, okay, well, I could do all this front loaded work. I can then focus my energy on things that matter rather than the typical trader who just comes in and focuses on the nearest thing that's moving. They look at a standard watch list of all the main stuff and goes, euro's up a little bit. Let's look at that. And then finds a trade. That's not the way to operate. You don't find the trade. The trade comes to you and you decide whether to allocate risk capital to it or not. There's a distinct difference. And that's ultimately separated between people who are doing all right and people who are just eroding and chipping away at gains and equity curves. Okay, so now we construct our trade ideas. This is not a webinar for that per se. We can go into it perhaps at some point on a future webinar if you'd like, but we're trying to now, and I'm kind of assuming you're experienced enough trader, because I think the title of the webinar, the content, hopefully has brought in people who have some experience in the markets. They understand what we're looking at here and what we're trying to do, what we're trying to achieve. Maybe you've been through, made a few mistakes, had a few challenges. You kind of know what you want to see, what your favorite trades are, what's your grade A trade, right? So maybe you bring a chart up and it's a trending chart and you go, I want to buy a pullback there. Okay. It's not ripe to be traded yet, but actually, if it comes back to that moving average, I'm interested. And so maybe you're a guy who likes to buy a 20 EMA or 20 SMA pullback on a daily. It's extended. You want to be interested there. You want to set alert a little bit before that. So you want to set alert maybe at 15. So a little bit of a quicker moving average so that it brings it to your attention. We'll talk about this in a moment and go into some more detail. But you're kind of looking, saying, well, maybe it's that level. Maybe I want to do this. Maybe I want a volatility alert. And again, I'll give you sort of info on that in a second, next couple of slides. But what do you need to see to be interested in that? And now we use technology. Yeah, technology, it's an alert. It's not the most latest tech, but not the latest tech, but it's an alert, right? We want to use that to make us aware there's an opportunity. Decide what you want, front loading the work again. We've filtered, we've screened, we've got the stuff that's moving, it's shifting, it's offering the best opportunity for short-term trader. Check. Now we set alerts for the trade, for the markets that we're most interested in, that we think are in play. Now, something might be a good chart, but you're like, it's a good chart, but I don't know what I want with it. In which case, you don't put anything in it. Another might be a good chart that says, actually, if it pulls back to that level, I might be interested. Or I might not want to, I might be, it's an area I want to do business at or consider doing business at. Decide what you want, set an alert. And by the way, this is easy to not do. And most people will not do this, and they'll just come and in the week, we've got a couple of hours to come in and trade the normal stuff. But if you're prepared and you do the work beforehand when you can, we have the opportunity. That's why I'm just kind of saying this now. You've got the time of the weekend, you've got an evening, whatever. That does the heavy lifting for you, so that in the moment, in the week when you're busy, you know that alert is pretty decent. You know that actually I do want to get involved in that. I've got a few minutes to trade this now. I know it's something I want to trade. The structure, the context is so spot on. I talked about context before. That's in tune. That's in line with what I want. Okay, let's go. Let's do it. So just a quick kind of thing on alerts. I've only got good time. So alerts on price. The way that I like to operate with alerts, and this is the way that I like to approach things, is I'll have an area, let's say natural gas, right? This natural gas chart pulled up yesterday and put it in the slide. It's a bit of follow through today, I think. Last time I looked, it's not quite got to where I want it yet, is it? Oh, it's backed off a touch. What a surprise. Quantities tend to do that a bit at the moment. Anyway, by the by, a zone of interest I'm interested in, maybe it's that three-figure level. I'm like, okay, I might be interested in kind of getting short if we had a good momentum upwards, a good rate of change, pushing up through the three without a catalyst. Maybe that's a short opportunity I'd like to take. That's something I do like to take, actually. A quick rate of change, no real driver, flushes through, reverses intraday. Great. I quite like that. And so that would be a level I'm interested. I don't know, watching this now, could it go up, could it go down? I don't really know. I don't really care. But that would be something I'm interested in. So I can now, it's come through my screen as a chart of maybe interest because of the gap on the drive. And now I go, right, that's a zone of interest, but I set my alert on a line before I get in there. You don't want to be like, beep, beep, beep. Oh, geez, you're getting running off, trying to get your order in because you think you haven't got time to do anything. You want to, say, hey, things are interesting now, and especially when you don't necessarily and you aren't able to respond immediately to the alert. If you're at work, if you've got stuff going on, you can't just go, well, I'm going to trade now, I'm going to drop everything and just run off and watch natural gas. You probably can't do that. So just bring it to your attention. It's right, there's my alert. Okay, I know we're close to that. So when I get chance, I'm going to look and I'm going to perhaps put some orders in. I'm going to use limits. I'm going to maybe put some more alerts in. I'm going to become a little bit more aggressive with my focus because I know I'm now approaching the zone of interest. Very, very important, because if we have the alert too late, then the stress comes back on us, and all the front-loaded work we've done is almost pointless because you're like, oh, geez, I've got to do something now. I'm going to miss it. And you're panicking and you look at your phone and no. You want to be, okay, I need to bring my attention in. And when I can, there's no real urgency. If I miss it, I miss it. That's just the nature of the beast. But at least your focus is narrowed. Your blinkers are on. You're like, natural gas is in play. I've decided it's an interesting chart. It's a setup I like. It's coming to the price level I'm interested in doing business at. Not yet. However, you have my attention. What's that? It reminds me of that movie. Is it Django? Says you had my attention. I can't remember the line now. Butchered it. Leonardo DiCaprio, great movie. Anyway, zone of interest. Set your alert way before that. Another way to do it is to set an alert on indicators. You can do this very easily with TradingView. So, oh, by the way, I think most people know this is not a kind of a master class on setting alerts, but you just right click on your line and you set an alert. Very easy on TradingView. Most of you guys, I'm sure, are aware of that. If not, go on YouTube. I'm sure there's a really simple and good video to show you the process of that. Another one is to set alert on indicators. So Netflix, for example, maybe you want to buy a pullback. I don't know if you do. Maybe you do. Maybe you don't. Maybe you don't care. But let's say, for example, you do. You say, okay, well, I want to maybe buy the first close under that moving average, and that's something you possibly could do as a trader with limited time. You've already done the legwork. You've already front loaded the effort. You said, right, I think this is trending. Maybe a great example would be here. I get a persistency of trend, check. Rate of change, pretty decent. Okay, I'll set an alert on this 20 EMA. Oh, sorry, this is 10, I think. You set it when price crosses it, send you an alert, and you can configure the alerts as you like. Great, price has crossed it. We've closed below it. Now you've got time, and you say, okay, and especially if you can, if you are into swing trading US stocks, you can have your alerts. And if you do have maybe that hour in the evening between 8 p.m. and 9 p.m. close, that's UK time, by the way, you can look and say, this looks like it's going to close below. And it's brought your attention in. That's the key. It's brought your attention to something that's in play and you're already interested in. You go, actually, you know what? I'm prepared to take the overnight risk. My position size is all defined. My risk is defined. I've seen the alerts, brought my attention. I've got my last hour. I know I've got to review any alerts that have gone off and decide to take the trades or manage trades accordingly. And then you take the trade or you don't. You know, but it brings your attention. And maybe in that example there, you took it at the close. Great. Next couple of days, you got a bit of a bid. Fine. Maybe you made some money on that one. Here's something you can set on for volatility alerts. I've had this set now for a couple of years on USD JPY, the old intervention thing, you know, when a Bank of Japan are intervening. And so what I did is I've actually used a daily chart here, but it's on 1 minute chart. I did it on, this is a range at the bar. I set a line at the range of the bar and I set alerts on that. And basically, if the range of the bar was above, I'm not quite sure what my settings were, it would alert me and I get a little message that said potential intervention. And that's actually been pretty lucrative for me. You know, I've been able to then come and look at it and say, okay, that's a fade trade for me. I wait for the flush or whatever it might be. It just brings my attention. I already know my game plan. I front loaded the work. And this is not necessarily because I don't have the time, but I'm not going to be in front of the screens all day long, right? I'm at the gym, I might be doing this, whatever it might be. And so I want that alert. And you can do this on a daily chart as well. You can say, hey, I want a volatility alert. There might be another way of doing it, but you can literally draw a straight line on a 1 day range, a 1 day ADR. And you can say, hey, I want to be alerted to a market that's doing, you know, the most it's done for the last 2 months, in which case you put your line at, say, 4, you put an alert on it, and then if you saw that range, it would bring it into your attention. So there's ways and means of doing it and being smart about how you use alerts. You don't have to, you know, use traditional stuff. You can be clever, but again, it's got to align with what you're trying to achieve in the markets and your strategy and where you're focused. And honestly, what this does, it brings the things that are moving and that have inefficiencies to your attention. You're an inefficiency exploiter, could you say? Yes, maybe you are. And so you want to bring those inefficiencies, those price action movements, those supply demand shifts when things are moving right to your attention right at the right time. And, you know, I have to say that this has been, you know, very good. Just being able to be aware when something, now is it always an intervention? No, that's why it's got a question mark there, but you get the idea. You can do this on the market of your choice. Hey, something's volatile on this time frame. I want to look at it. And maybe you can't look at it straight away, but at least it brings it to your attention. You know something is going on. Okay, so let's talk about process. So now you've done the legwork, you've front loaded all your effort, and then honestly, that's honestly the separator. You know, even if you are, you know, trading more aggressively, you're trading intraday, you've got more time. The work you do outside of trading is the difference maker. You know, the pie chart, I've talked about the pie chart being that, you know, traders who are struggling the pie chart tends to be the big chunk is execution, sitting in front of the charts, waiting for a trade. The small chunk is the preparation. And actually the traders who are making it happen, who are doing things that are making moves, you know, equity curves in the right direction, that pie chart's flipped. The execution is a very small slither, but the big chunk is the preparation. It's working out the context. It's planning the trades. It's doing the journaling, all that other stuff. We'll get to the journaling bit in a moment. But, you know, your job should be very, very minimal in the day, because that's the way you're time constrained. That's where you have that limited amount of resources. So now you just wait for the right price or price action to initiate the trade. You've done the legwork, you've got the context, you've got the framework, your alert goes off, and now you can go, right, I can't trade it now, but I can look at the end of the day. And if that's still in play, then great, I'll position. Or I can get to the screen because I'm available to come in and see. I know exactly what I want. I'm going to set a limit a little bit on the market. I'm going to get a little feeler position. You can do this, or you can decide how to do this yourself. It's just the alert that draws your attention to that market. Remember this, if you can take as much of the decision making away from you as possible, that makes the whole thing more relaxing. It de-stresses stuff. It's super efficient. It's just a much better way of trading. You can do all that front loaded work when you can, when you choose to leaving a little bit for actually when you don't have the time to do it. And that's the key thing. If you can do that, and the more you can shift it that way, the more relaxing it will be, the more calming it will be, and the more you'll be happy to do nothing, because you're like, listen, I have a bunch of markets with alerts set, with ideas on, that I'm just waiting to resolve. And so when you're sitting there and you're not doing anything, I've not made a trade today or yesterday, that's fine. I don't feel any urgency to, because I've got everything set up. I'm just waiting for something to resolve itself and it will bring it to my attention. Versus if you don't do a trade and you don't have that, what happens? We both know that actually what you do is you tend to look for a trade. You go, I haven't traded for a while. Let me find something. You go, oh, Dow's moving a bit. I think it's going to roll over. Click, and you just make something up. And of course, there's no edge in that. And what happens over time, that is not going to work. You might get away with it a couple of times, but over time, it doesn't work. So we're trying to develop this process. Okay, so reminder, your alert is triggered. What do you do now? You evaluate the trade and you execute when you can. Like I say, you run through your checklist. You go, right, what's my risk? I've already know what that is. Where's my stop? I already got a good idea where it's going to be. Where's my target for this? What's my headline risk? There's nothing more to do than to execute as per the plan. If nothing material has changed, you don't need to overthink it. You just say, right, I've got the opportunity to trade this. I've already done the legwork. Okay, I'm happy with the risk, happy with the position size, double check. It's a very short process, and that becomes so much more you're able to do. It's not such a burden intraday when you're busy and doing stuff than it is, I've got to find a trade. Finding a trade and doing all that legwork is way, way more pressure than actually I've done all that. All I've got to do is check my risk, my stop, my target. Is everything still as it should be? Not some news that's broken out all of a sudden. No, okay, fine. I'm happy to take the trade. It's just that final little check. That's nothing, right? And that's the difference when you don't have the time to be able to put that work elsewhere. And one of the things is, okay, maybe I don't have time to get to the screen immediately. As I mentioned, you just say, well, I'll just come when I can. I know that that's in play. I accept I might miss this one, but I might even get a better price. That's okay. That's fine. And so you adjust and adapt based on your specific circumstances. Okay, so what else have we got? So ChatGPT. ChatGPT is super, super good at this. I've done this before. We talked about some stuff, which is, it's even getting better and better and better. As predicted, it's just moving in leaps and bounds. You can kind of look at some of I think it was a 4 or 5-parter with Pepperstone. We're talking about AI and using AI. Slightly different way to kind of use this as a tool for your trading now is to ask it questions about the markets you're trading. We want efficiency. We want to spend as little time in front of the screen as possible, right? That's the objective of this webinar. It's the objective of life. No one really wants to be glued in front of the screen. So let's use ChatGPT as your trading buddy, right? Things you can do, example, in a moment on the screen, you can ask it questions about the markets you're trading, i.e., hey, I'm thinking of buying natural gas. This is what I do. I will load in a watch list of stuff and I will say, hey, what are the most important points driving these markets right now? And I know them really. I know what's driving the stuff I'm looking at because that's my job as a trader. But if I didn't have as much time and I wanted to very quickly get up to speed on what's driving some of those stocks, ChatGPT is going to go away and it's going to find it. It's going to say, hey, this is what people are looking at with Coinbase. This is what people are looking at with Tesla. This is what people are looking at with Netflix, natural gas, crude oil, etc. And I'm going to get a rough idea and go, okay, I need to dig in more and double check, obviously, with ChatGPT because sometimes it makes mistakes, but it helps me understand very, very quickly. And if we're on about efficiency, especially when we've widened our net with some of the different markets, it helps us understand the nuances of stuff. Like, hey, the reason that commodity is rallying is because there was some kind of drought in this country, which is a major producer. Blah, 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 blah. You get the idea, but you may not have known that, and it'd take you ages to dig in and find that. You'd have to know a certain place to go. ChatGPT can help you summarize that so much quicker. And so you can go, that's okay. I like that market because it's the chart I like. It's got a catalyst I like. I know what I need to look at. That's in my sphere of something I might want to trade. You can quickly identify headline risk for the week ahead. Example of that in a moment. Next slide. And now you're fully prepared and you don't have much to do. And that's what we're trying to do, right? We're trying to slow things down, doing all the work. I think I said front loaded many times today. When I say front loaded, you drink, we have a drinking game. We front load the work and we do all the stuff when we can so that we have a minimal amount of stuff to do and execute. Example here, ChatGPT has said to it, hey, Natty's in play for me. I said natural gas. I don't know if you know what Natty is. Natural gas is in play for me. As a trader, what headline risks do I need to be aware of in energy this week? And it came up and said, hey, look, you've got CPI, you got PPI. I'm like, yeah, I know. And it's reminded me and said, hey, you've also got the US Energy Information Administration, the EIA, weekly natural gas storage report. And I went, yeah, you know what? I forgot. I've not been a while since I traded Natty. Of course, the storage report. We have it with the oil, we have it with crude, we have the crude, the natural gas. This is the kind of stuff you can do to very, very quickly de-risk or limit the risk or understand the headline risk that you've got on the market you're trading. Because obviously the downside is when you widen your net, you're not so familiar. Like if you're a DAX trader or a Dow trader, you're going to know CPI is coming up. You're going to know PPI. You're going to know NFP. You're going to know Fed. You're going to know the things that drive it. You just do. But when you're trading a little bit more, you go, actually, I need to know the earnings. I need to know if there's some sort of headline risk, a sort of court case here, storage report, whatever it might be. Maybe it's inflation in China. It's going to impact gold. You need to know that. So use ChatGPT as that tool. It can get it wrong. Be aware, it can get it wrong. It has done, it will do. It's just the nature of the beast. It's not perfect yet, but it's a good way of really using a kind of research assistant that's there. And you can go, hey, these are the stuff I'm watching. Just go and tell me what I need to be aware of, what's important, what's driving this, what's the headline risk. And so you can trade them with a little bit more, be more relaxed about where the risk is going to come from. Okay, so now let's finally move on quickly to your daily routine. It becomes low stress. You just act on new alerts and you just adjust trades that you've got. If you've got a few trades that are running, your job now becomes, hey, I've got very minimal time to act on alert when they come. That's fine. You know what you're going to do. You've already decided how to act. And you may adjust some positions. Maybe you tighten some stops up. Maybe you peel some off. Maybe you adjust some targets. That's a very simple process, right? You don't have to be there, burdened, stressed, eyeballs popping, heart racing, trying to find the next trade. There's no need. Just chill out, relax. Like, okay, my process is here. It becomes very easy as well to adjust and adapt your process and improve things over time because it's slowed down. And maybe it is still intraday trades, and that's fine. It depends on the time you've got, but it's still much, much calmer than coming in and trying to find stuff. Your weekly routine becomes screening for the in-play markets, journaling your trades. I didn't go into too much depth about that. Don't overdo it. If you haven't got much time, don't overdo it too much. Just the basic stuff is fine. And making minor plan adjustments. But you can see how putting all that work into that weekly routine, when you can do it, when you do have the time to do it, takes it away from the daily burden. It's just easy. It's chilled out. It's relaxed. You can get good. You can get focused. You can get very, very you get the process really nailed down. So summary for you guys. Solve for the constraints you have. Too many traders I see, and I see this time and again. I'm like, come on. They go, I wish I didn't have this. I wish I had the time. I wish. You don't. That's the constraints you have. Just like any good entrepreneur, you go, hey, my constraints, should I say, are capital. My constraints are time. My constraints are knowledge, whatever it is. Let me solve for those. Okay, I can't change them. You're not going to suddenly go, oh, wow, you don't have to work anymore. Or you don't have a family anymore. You're going to have those there. So rather than just going angry at it, go, well, I'll solve for it. And this is one thing we talked through today and we've workshopped through together. Do you need a fresh approach? Optimize for efficiency. We're all about efficiency. A lot of people fall into the trap of, well, if I work hard, that must mean I'm going to get better results. It doesn't work like that. We know it doesn't work like that. Of course, hard work is a given, right? It's a given. But actually being smart with how you allocate that effort is going to give you, 10x times the results, not necessarily from a financial perspective, but from a growth perspective than anyone else. Everyone's working hard. But if you're using leverage like the tools, like AI, like alerts, like front loading the work when you can, you're doing the smart things for efficiency, that will accelerate your learning curve way, way more than someone who's still working hard, but they're not using anything for leverage. They're not kind of leveraging on AI, however you want to pronounce the damn thing. They're not doing that. So use tools like screeners, alerts, AI as your trading assistant, become a bionic trader. Right? Develop those simple routines you can stick to, make trading work around you. This is why I wanted to mention this. This is why I put this one on. I did a podcast a while ago with R2 Kokilla. He's managing 32 million euro. Not quite that now, but he day trades FX over news. And why I mention this man is this. Because he front loads all his work. He's just started releasing an email, I think, talking about some of his research. I think it's publicly available. But he does so much work studying how he's going to trade. And then he trades FX over news releases. That's all he does. And he's got a massive track record for it. It's there for you to see. We talked about this on the podcast that we did a while ago, but why I thought, this is something you will be interested in is because this guy does all the work beforehand. And yes, he is there and he's ready in front of the screen during the news. So he can say, if it does this, I'm doing this. If it does that, I'm doing that. If it does this, I'm doing nothing. That's what you want to be. Not necessarily a news trade. I'm not saying trade the news, but the front loaded work. And then, the actual execution becomes almost, very, very simple process. So that's worth listening to there. And the final thing is advanced automation. I wasn't going to cover it today, but let me know if you want to go deeper into this, because I've got some stuff I would like to share with you if you think it's of value. So you can reply to my email, send an email to Pepperstone, whatever it is. But I've got some stuff that's quite early days here, but there's ways now that we can really leverage on OpenAI, ChatGPT. We can use webhooks from TradingView to link into ChatGPT, to send messages here, to grab that. It's pretty advanced stuff, early days, but if you're interested in that, I can share it with you. If you think you know what, let's go back to the basics. Let's keep it. I need to sort my discipline out and do strategy. That's fine too. I just thought I'd put it out there before I just did a whole webinar. And everyone's like, I'm not interested in this nonsense, Mark. You're a nerd with this. You carry on. I just want to know this. And that's fine. Okay, that was a long webinar. I hope I haven't bored you. Have we got still people in the crowd? We have. Okay, well, either everyone's listening or they're on mute. I hope you found that valuable, guys. This is an interesting one. I know it applies to a lot of traders, so I've tried to make it as valuable as I think as I possibly can. And like I say, I always think, well, what's going to help? I believe help the most when I see traders who are busy. I see this time and again. I thought efficiency is one thing, but there's no point being efficiency unless we can kind of solve something. So maybe something to consider. I know it's out of left field. I know it's a completely different approach, and you might be like, oh, there's a bit of friction there, but perhaps it is something to consider. Okay, I'm going to very quickly have a look at the Q&A. I don't want to keep you. I know I said it would be an hour. So if you have to go, absolutely fine. No need to apologize or anything. We've great presentation. Thank you, Gary. Says thank you, Nina. Thank you, Alison. Thank you, Victor. Thank you, Gilda says interested in AI. Good. Rob says thanks, Mark, on a busy schedule. So it really helps. Good. Thank you. Appreciate that, Rob. I'm glad it resonated with you. I hope you found some value from that. What else have we got? Great webinar. Appreciate that, Jane. Thank you. Okay, a couple of questions here. Oh, I had the chat and I've got everything rolling here. I've got the chat and the Q&A. Let me bring you over here. Seth says very insightful. Thank you. Arno says thank you. Thank you very much, guys. Appreciate it. Beth says great webinar. Thank you. Really appreciate. Thank you, guys. Sometimes you're standing there talking to your screen and you go, is anyone listening to this? So I really do like that you found value from it. I do appreciate that. Okay, so Michael says, thanks a lot, Mark. Very valuable. I'm thinking about the set and forget approach to the analysis. Set the entry, target TP, and go away. Yeah, honestly, Michael, try it. This is one thing. Finally, I want to say this. Okay, you don't have to commit to something. You can say, I'm going to try this for a couple of weeks and just see. And maybe you don't get the results you want, but if you feel more relaxed and you're like, you know what, this is quite a chill way to trade. I'm going to make this work. I'm not going to do the other thing I was doing. I'm going to make this work because I like this. I like being able to relax, do my analysis, set my ideas up, decide what to do. I appreciate I'm not going to be amazing at it first straight away. I'm not expecting to kind of knock it out of the park immediately, but I am knowing how I feel about it. How you feel about your trading is so important. If it feels like it's tough and it's friction, it's probably not the right thing to do. If it feels more relaxed, but maybe not getting results you want, that's okay, because you go, okay, well, I know I'm going to improve with this. And so something you can consider is, hey, well, why don't I try this? Why don't I try a different approach? Why don't I revamp the way I do things and just see how it makes me feel, and forget about the results for now, but just see. And then the performance can improve over time. You can make those little adjustments. Gilda says, Gilda, sorry if I butchered that. The set and forget could work for me under a lot of stress lately, busy work, life, and no sleep. I get it. And this is kind of one of the reasons I wanted to do this. I know that many people, are into trading to try to relieve that a little bit. And it'd be nice to make this work for you. You'd like to get better at it, but ultimately that's where you've got to focus your energy. And so it becomes this cycle, if you're not careful, of exhaustion, you're flat out. Then you come to the markets when you can. It becomes bottom of the rung because you're very busy, you're stressed, you're already kind of tense. That's a very difficult place to trade from. So again, solve for the constraints you've got and say, right, I have to do that. I've got nothing to do. But however, when I have time, I can be relaxed. You're sitting on a train, whatever you're doing, I can do some of this stuff. It makes me feel good. I feel comfortable doing it. I enjoy doing it. And actually, if over time it starts to work for me, then that's perfect. Yeah, that's a perfect way to do stuff. Okay, thank you, ladies and gents. I appreciate you all, and we shall call it an evening there. Let me stop the sharing, and I shall maybe see you. Actually, won't see you next week. I'll see you the week after that. We're back with another hopefully interesting webinar. Appreciate you guys. Take care. Bye bye.